We've got a couple of managements, so let's get straight to the first one. SJS Enterprises that reported record quarterly revenue and margins in the third quarter. Exports as well have moved up. We have with us Mr. Sanjay Thapar, the Group CEO and Executive Director at SJS Enterprises. Hi, Mr. Thapar. Good morning and good to see you. Well, we've got a few talking points. What's the outlook for FY26? Update on the agreement with the BOE Varitronix, as well as the growth opportunities in exports. We'll get to that in just a bit. For the time being, give us the headline number, sir. What kind of growth trajectory do you expect to do from here on? And also, if you could help us out with margins, they are looking very, very encouraging. Can you keep up the pace?
We kept up pace for the past 25 quarters. So ever since we've listed increased margins, we've improved the top line. So we see no reason to stop now. So our portfolio is bigger than ever. And we see very strong traction, not only with domestic OEMs, but with global OEMs and global businesses. So we are extremely positive and bullish on what the future holds for us.
Okay. And give us a number, sir. What kind of growth number can you maintain? Margins, as you said, for 25 quarters, you've maintained it. So you're very, very confident about it. But growth, how do you see that pan out? And also exports, that's been perking up a little bit. We have signed an agreement with the EU. Could that add an additional tailwind to the mix?
So putting numbers in perspective, so we've grown 27% CAGR since our IPO in 21. December 21, we debuted. And we see that growth continuing. That's a mix of organic and inorganic. Last quarter, we grew 36.4% year on year. Last quarter was the highest ever, with EBITDA margins at 30.5%. So we are confident of maintaining those EBITDA margins in the region of 28-29% moving forward. And growth also continues to be very strong, given the traction that we see with millions both in India and overseas.
All right. While we hear you, Mr. Thapar, I think the voice is a little muffled as well. So we'd like you to, speak up a little more so that our viewers will get clearly what you're saying. You've compounded over 18% since the IPO on the top line. Your margins between 28 to 29% stay, and your revenue growth upwards of 20% also stays. So that's an important point that we've gotten out. What about your revenue currently coming in from new gen products, which is around 15 to 17%? How much do they now contribute, and how much are they likely to contribute going forward? Because new gen is margin accretive and growing at a faster clip as well.
New gen is about 23% of our sales currently, and we expect this to go up to maybe 25-27% for the next 3 years.
25 to 27% over the next 3 years. And I remember speaking with you when you had just signed that deal with BOE as well. You said that it's a market which in India is about 1,500 crore rupees, could over the next few years compound all the way up to 6,000 crore rupees. Have you started any work on the JV that you had signed? And by when do we start seeing some revenue accretion on that one?
Yeah, so it's a TLA, technical license agreement that we signed. And the plant is, we've leased a facility, almost a large facility in Hosur, very close to our parent plant in Bangalore. We have the equipment is on order. We expect in FY27 the equipment to come in and trials to be done. In FY28, we'll see revenues coming out of that new plant for the display system.
All right, FY28. So could you tell us, how do you see this business scale up? The agreement that you've signed with BOE, you'll get the equipment ready, then revenue start trickling in. So say by FY30, what can the number look like?
We hope to be at least 15-20% of the market. I mean, that's the idea. So we've set ourselves, we'll review this as we get along. But my personal target is that we should be at about 400 to 500 crores by FY30. That is the target with this new line of business.
All right. And what about the consumer space? You have a fair amount of exposure to two-wheelers, four-wheelers. You said that cockpits are getting more digital. So there is a fair amount of, detail out there. But beyond that, in the consumer durable space as well, a lot of decals and, the kind of products that you make would be used. The last time I spoke to you, I remember it was about 20% of your revenues. Where does that stand at? And where do you expect that one to go?
That is close to about 21-22% today. One very large business, a very large market, and that is legacy growth long term. There is a large market both in Asia and in Europe and North America. And we have relations with all the markets So we see that very final as well to increase. And overall, my belief is that
Mr. Thapar,
all our businesses are fast, so it will continue to be in the range of 20 to 22% over the long term.
All right, you'll continue to be at that 22% for the long term. I believe that there is still that audio glitch. So what we'll do is, Mr. Thapar, we'll leave it for now. The street has an inkling into what you are likely to do in the very near future. We'll invite you once again, over the next, month or so to get us an insight into what's taking place in the business once again in the middle of the fourth quarter, and also the outlook that you have at a much better reception or audio as well.